Welcome to a special market update. We're going to be focusing on some Forex markets in this update. Essentially, we've been trading laterally for the past few weeks between around 129.50 and 132, 132.50 in the Euro US. Interestingly, notice how well the shooting star worked at signaling a top, and notice how we came back or approaching. I'm doing this as of Friday at about 9:45 Eastern Time, approaching the recent low. So the reason for this update in the euro is a couple of ways to think about trading this. If the market bounces from around the lows here, which were at 129.55, and starts forming, say, a doji or hammer, once again, this is early in the session on Friday. If it starts bouncing from here, we could look to a return to the top end of the lateral range around 132. However, if it does close under the 129.50 area, what I would do is, or what I'd be watching, is getting a target, essentially taking the height of the lateral range, and that's about, let's round it off, about 250 pips. Take away 250 pips from 129.50 would give us a target to the low here that was made back in April, right around the 127.50 area. Now, it's important, if the market does close under 129.50, it does not get back above 129.50, because this prior low here from around 129.50 to the lows, let's draw another trend line over here, to the lows over here, right around 129.75, rounding off. Based on change of polarity, this prior support zone should be resistance. So on any close under 129.50, the 129.50 to 129.75 area should be resistance. And by the way, we have Bollinger Bands. I like Bollinger Bands in a lot of the markets, Forex and other markets. And when you can see when it gets to the top end of the Bollinger Band, I view it as overextended, overbought. So right at the top end of the Bollinger Band, we had a shooting star. And you can see how nicely the bottom end of the Bollinger Band held as an oversold area, making the market vulnerable to a rally. So that's why I have the Bollinger Bands here. Here we have a 20 and a 50-day moving average. Don't have time to go into detail on how exactly we use it, but essentially I use it as an intermediate term trend, and since the 20 and the 50 are kind of converging, to me the trend is more neutral, slightly higher, but more neutral, because the 20 is converging with the 50. And here on the dollar yen, notice how the market broke above a resistance area set with a doji. So the doji over here, this is actually an evening star. And for those who saw my webcast earlier this week, we actually did discuss this market and how some people misread this signal. If you didn't see the webcast, I'll have a link to the video in a couple of minutes at the bottom of this, or as part of this session. And so getting back to this breakout area, this old resistance area right around 100, the psychological area, should be support. Notice how well this bullish engulfing pattern, the white wrapping around the small black real body, worked. And our target in that scenario was right up here, which we got to yesterday. Anyway, right now this old resistance area should be a support level. And we have to go to a monthly chart, which I'm doing now. And by the way, the longer term trend is up with the 20 above the 50-day moving average. The market is getting into overbought territory at the top of the Bollinger Band, but no bearish candlestick signals as of yet. Remember, I'm still doing this early in the morning on Friday, so by the end of the day, the candle signal will be looking different. But let me go to a monthly chart to show where a next long-term resistance is, and that's all the way up around the 112 area. Up here, back from the highs made in 2008. Let's go back to the daily chart. But on a shorter term perspective, as far as targets, we could use classic Western technicals. So we have an ascending triangle here. And to get a target with the ascending triangle, you take the height of the base, or the flagpole, or whatever, here. And so it's from 96 to 100. So that's a target of 104 now in the dollar yen. And we'll look at the pound dollar. Now approaching a support area. Look, this actually looks quite interesting. Look at these long upper shadows. Okay, all these shooting stars, small real bodies, and now it's a classic rounding top. The longer term trend is still up. The 20 is above the 50-day moving average, but we are approaching a support area based on the change of polarity. And I'd actually use this as a zone here. No bullish candle reversal signals yet. And if we do get a close into 153.50, my next target are the lows here right around this support area, almost a bullish engulfing pattern here. And remember, there are nuances in candlestick signals in Forex compared to non-Forex. The engulfing patterns look different. All the double and triple candlestick signals do look different in Forex. But anyway, getting back to this, so we're at a support area here. If it does hold, my target would be the top end of the range here, right around 156. But on a close, like I said, at 153.50, I'd be looking for the next support down right around the 150, a little under the 152 area. Now, for those of you who haven't had a chance to check out our special Forex training programs, go to this link because we have the special price and a lot of cool bonuses, including our Nison FX University, brand new, where you can get ongoing education and also take a certificate of expertise exam for the Forex. And if you pass it, you become a Nissen expert in candlesticks for Forex. So go to this link to find out details.